Hi everyone, my name is Simon Hodson from Optimised Accountants, and in this video we're going to be talking about mortgages. And no better person to give you a mortgage update than our very own mortgage broker, Simon Hodson from Funded. Hello there, Simon.
Hi Simon, how are we doing everybody? Yeah, so this is a slide that looks like it's full of data, but it tells a really great picture. So you'd be forgiven for thinking that the Bank of England base rate is what determines how much or how costly your mortgage is. That's not correct. It's the sterling overnight interbank swap rate, which is roughly how banks borrow from each other to then lend out. It's a little bit more complicated than that. But what I'm looking to show you here, guys, is that back in the middle of the mini budget chaos that we had, when lenders were pricing their products in the 6s and the 7s and sometimes the 8%, it was costing them over 5% to borrow money on the open market to then lend out to you. Fast forward to now, 13th of Jan, you can see that the 1 year product or pricing is at 4.2 and 5 years is down at 3.5%. So effectively it was 50% more expensive to borrow 5-year money in September than it is now. And what that tells us is that the banks are far more comfortable with the market, how it's going to price, where the Bank of England is going with rates, and we're actually seeing rates coming down.
There was, just before we go on to that, obviously we know about the fears of the economy, Liz trust, don't trust syndrome. What you're saying, though, is that actually the banking industry have calmed down from the government's chaos.
Absolutely, yeah. In fact, these swap rates are at the same levels that they were before the last Bank of England base rate change on the 14th of December. So the Bank of England raised rates by 0.5%. That 0.5% was already predicted and priced into these numbers, and they didn't change. They actually came down a touch. So that gives you an idea of how comfortable they are with where they now think the market's going. You'd be forgiven looking at the press that there's still chaos going out there. There are still some difficult numbers, but we are on the road to a degree of predictability.
And what's nice as well, I don't know if you've seen this yourself, but the ONS have suggested that it could be 0.2 growth because of the World Cup. So who's to say that we're actually not in recession, even though everyone keeps saying we are?
Indeed, yeah, unofficially not in recession for the last month's ONS report, and also for the last quarter, wasn't it? I think the last quarter was 0.3 and the preceding month was 0.1 growth. So yeah, technically not hit recession yet.
Yeah, exactly. And people speculation will keep on saying it, but what's the some lenders have reduced rates? Is that basically what you said?
We're still seeing rate reductions. So there were a raft of lenders as we came back from the Christmas break. We've got limited company buy-to-lets, HMO buy-to-lets now down at 5.2% for 5-year products. There's some holiday let, furnished holiday let 2-year products out there, although they're capped at 70%. They're at 5.29. They were well north of 6% pre-Christmas. So yeah, there's good lending and borrowing available at the moment.
There you go, perfect.
Yeah, just to give you, this is a brief, quick sort of rundown. So bridge lending is up. So there are people out there buying, potentially there are people using bridging to buy something now, hold, do some refurb in the sort of predictability that they feel that rates will have gone down in 6 to 12 months and they can then get a better 5-year product. So
that's just about to say, is that really, that must be a very good strategy for some people that buy a property that's run down, do it up on a bridge and then convert it to a buy-to-let in 2-3 months time when, like you say, the rates will be much better, won't they?
Absolutely. Yeah, totally. It's a great strategy. I'm even seeing some borrowers using trackers as well, kind of going, we're not going to take a 5-year fix, we're going to take a tracker and then come out early. But yeah, both are strategies that we couldn't have considered back in November. We can now really look at properly now with a degree of certainty.
That's perfect. Okay. And you talked about the rates going down, which is fantastic. Mortgage product choice still down 41%. What's that?
Yeah, okay, so there's still less products out in the marketplace. So a number of lenders pulled their full suite of products that they had, narrowed it down to make it easier for them to manage, but also to reduce maybe some of the more esoteric properties that they would have lent on previously that they're now not lending on. So you've got to be really sure that the property fits a lender. It's just really key to speak to a broker before you buy to make sure that your exit stacks up correctly.
And that's an interesting point about Savills. Let's talk about 10% drop from now and 2024. I mean, that's quite a hefty drop, bearing in mind that most people have said it's already dropped 5 to 10%.
It is a hefty, yeah. That's probably the most pessimistic out there in the marketplace. The rest range between 2 and 8%, and as you rightly say, we have had already some falls within that. Again, with that certain or far more greater level of certainty in terms of funds and cost of funds for banks to lend out, that 10% looks less and less likely to come to any kind of fruition, and more of a soft landing as we go through. However, as investors, we can leverage that's in the news. So your uneducated landlord that might be selling up thinks, yeah, it's going to go down by 10%. I need to sell quickly, and I'm happy to sell at a discount to get it off my books. And that will lead in nicely to the type of funding that's now come back out for this year, which is a brilliant product, absolutely brilliant product, which for us educated investors, we really do need to run with.
Interesting, good stuff. And 100% purchase funding is back. I read that with great interest just before our session started. Tell us more.
Yeah. Okay, so effectively, there are bridging lenders out there now that will lend 100% of the purchase price as long as you're buying at a discount, a genuine discount. And that was difficult to do pre-interest rate rises because the market was so hot and getting on any kind of discount was really difficult. But what we're now seeing is that there are less properties coming to marketplace, and those people that are going to market are the ones that are motivated to sell and have to sell and understand that they need to take a haircut potentially to get that property off their books. See, I've got a client who I'm doing a small portfolio purchase, 30% below market value. They're putting no money in the deal to buy it.
I mean, that's phenomenal, isn't it? 100% funding. I mean, you pretty much you're able to go out there, get a bridge loan finance. It's almost like a no money down deal.
That is exactly it. Yeah, just your purchase costs.
Yeah.
There are some caveats in there, which we're going to cover in a second on the next couple of slides. But, you know, for a number of deals, it works brilliantly, absolutely brilliantly.
Bear in mind the type of property you're buying, though. You're buying it with very little money, aren't you, typically, to buy a property, and then you're doing it up with someone else's funding, which is amazing. But please go ahead.
Yeah. So just give everyone out there how it works, an idea. So they'll lend 70% of OMV, that's open market value, up to a maximum of 100% of the purchase price. So they won't give you money to buy the property, but that seems quite obvious, quite fair, isn't it? But they'll also lend you up to 100% of the refurbishment costs on the property, as long as the end GDV, that's gross development value, the lending doesn't exceed 75% of that end gross development value. Standard arrangement fee of 2%, there's no exit charges, and reasonable rates of 0.89 a month. So don't get me wrong, that's not as cheap as a mortgage, but if you're not having to put a deposit in and you've got a genuine discount, you're going to get all your money back out. And that's really the nirvana of where we're trying to get to in terms of investing and funding. If we move on to the next slide, I can give you guys just a quick little idea of what those numbers might look like. So we need to purchase at 30% below market value. So let's say you're buying at £210,000 and its genuine purchase or genuine value in today's money is 300,000. So we've got a 30% discount. You could do it with planning gain. So you could get a purchase lease option on the property, get planning through, and then use the new value that the planning gain has added to the property. And in this case, they had £100,000 worth of works to carry out on the property to turn it into a high-end co-living HMO, and it had an end value of 450. That's virtually no money down, and on the remortgage, pretty much all your money back out, even your buying costs. So that is, yeah, and that whilst this product was around in the back end of 2022, there were very little deals getting accepted on it, and the lender was really being very picky. But they're now really saying, you know, yeah, we're happy to do this. And as I say, I've got a client with a portfolio going through 4 properties, no money other than the stamp duty that they're paying.
Yeah, amazing. I mean, just go back on that point of its maximum lending is 75%. I mean, ultimately, you would be refinancing this property deal if you used to buy it to keep, and your mortgage of 75% would then cover that. So that makes total sense.
Absolutely. Yeah.
Perfect.
And as Warren Buffett says, be fearful when everyone is greedy and be greedy when everyone else is fearful. So now is the time to unpack, get this product out and get finding deals to buy, because as investors, this is where we make our money.
Perfect. And that's pretty much the update from us on the mortgage update. So we will be putting links throughout in terms of being able to contact Simon, whether you want a buy-to-let property mortgage, or if you want a furnished holiday let commercial mortgage, or indeed a bridge loan finance. So there will be links appearing above us right now and in the video description box below. So thank you ever so much, Simon, and see you again next month.
Thanks, everybody.